It's about that time of day again. My name is Joseph. Tuesday evening, December the 5th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, NASDAQ, gold, and euro this evening. Crude is bearish ahead of tomorrow's weekly inventory report. And I'm watching a prior support level, which I'm going to use as a key resistance level tomorrow morning. The S&P is bearish with another strong move lower to finish today's session. And I'm watching a key reversal line this time for reliable selling opportunities tomorrow morning. The NASDAQ is also bearish and trying to rotate back down to the low of a big trading range. And my plan for tomorrow is to use a short-term channel to time the best entries. Gold is also bearish, the big spike in channel to finish today's session. That tells me to wait for a retracement up into the battle zone for the most reliable selling opportunities on Wednesday morning. And speaking of Wednesday, euro is bearish going to tomorrow's session. Trade at the high of a channel right now, but a major support level is telling me to stay patient, wait for a deeper retracement off these lows for much more reliable selling opportunities tomorrow morning. Boy, I got a great newsletter in store for you guys and gals tonight. We're just getting this week warmed up on this nightly newsletter. Hope you guys had a great Tuesday session, and we're going to crack this wide open here in just a few moments. Before I jump into the charts tonight, though, I do want to remind you guys, if you're on YouTube right now, make sure you subscribe to this YouTube channel. And make sure you adjust the settings so you get notified every time I post a new video. And if you really want to stay in touch with what's going on here at School of Trade, make sure you follow the link in the description of that YouTube video. Come here to sidewaysmarkets.com for all the goodies. Most importantly, though, make sure you guys join our mailing list. You'll never miss another newsletter or psychology lesson ever again. Make sure you join that mailing list in the upper left-hand corner here on our blog at Sideways Markets. While you're here, don't forget, follow me on social media, lower left-hand corner, StockTwits, Twitter, Facebook, LinkedIn. I'm always sending out importance links, charts, and updates throughout the week. Speaking of charts, how easy is this? All the charts from tonight's video, that's right, you can have them ready on your computer for tomorrow, right where it says click here to download today's charts, right? And speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room tomorrow. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And of course, if you have any questions, hit me up on live support. We have a live support tool on the right-hand side of our blog at Sideways Markets and the right-hand side of our webpage at schooloftrade.com. And again, if you're on YouTube, the links are buried in the description. All right, tomorrow's a Wednesday session. Anytime I say Wednesday, I always think about those crude oil inventories. So tomorrow, if you're a crude trader, early in, early out. But let's go over the whole plan here, right, for tomorrow, Wednesday, December the 6th. Now, of course, looking down at the lower end of this screen, we can see we got a little bit down. Here we got a little bit of GDP coming from our friends down under. I don't think that's going to have too big of an impact here for tomorrow's session. Going into tomorrow's session, though, we do have some major news, right, from the Swissy at 3:15 Eastern Time. We're going to hear from the Reserve Bank of India at 4 a.m. Eastern. So if you're trading the early parts of the London session tomorrow morning, be aware there is some major news on the calendar. I don't expect that to be too big of a deal, right? Just in case you're wondering about that. Not a huge deal tomorrow morning at 3:15 and 4 o'clock, but those are the major news events tomorrow during London. Now, we do have the ADP employment report tomorrow morning at 8:15 Eastern Time. You're not going to see much of a reaction to that number, but that will play into Friday's non-farm payroll number. So this news report tomorrow morning, 8:15 Eastern Time, from the ADP employment number, that'll give us a bit of a kind of a heads up, right? A little bit of foreshadowing ahead of that employment number on Friday. So as we get later in the week, that Wednesday, that report tomorrow morning will become more and more important as we get closer to the news release on Friday morning. And last but not least, the big news tomorrow morning, I don't expect the Bank of Canada announcement to make too big of a splash tomorrow, because the only thing it would really affect tomorrow would be crude oil. You know, crude oil being a major export out of Canada. Everyone will be watching that inventory report at 10:30. So the Bank of Canada announcement at 10 a.m. should be very much I guess overlooked, right? Because people will be focusing on that 10:30 news tomorrow. Now remember, anytime we have that Wednesday inventory report, a couple things come to mind. First of all, early in, early out. As I always remind you guys on this newsletter, anytime I have Anytime I have a weekly inventory report at 10:30 Eastern time, they're usually at 10:30 on Wednesdays unless Monday is a holiday. Tomorrow 10:30 a.m., that tells me that anything a half an hour early, right? So 10 a.m. is just about the line in the sand on Wednesday mornings as far as getting decent price action and reliable trading opportunities ahead of the news. I'm talking specifically now about crude oil. The rest of these markets won't be affected too much by any of this tomorrow. But as far as oil traders go, anything after 10 a.m. tomorrow morning, you really want to be careful. Then after that news comes out at 10:30 tomorrow morning, I would recommend give it at least 5, 6, 7 minutes after that news comes out. You'll usually see a whole bunch of chaos, a whole bunch of volatility that comes out after 10:30. What I would recommend is sit tight or sit on hands or use duct tape if you need to, right? But resist the temptation to chase after that initial move tomorrow at 10:30. Wait for it 5, 10 minutes after, let it calm down a little bit, find that new direction, and then go from there. So early out, or should I say 10 o'clock, is that kind of line in the sand tomorrow morning if you're a crude oil trader. Also, don't forget, if you follow me on social media, Facebook, Twitter, StockTwits, right, any of those services, I sent out my inventory support and resistance levels. I sent those out right about an hour and a half ago. So if you follow me on social media, you already got those right on your page. Most important thing is I'm going to put them on the chart tonight for crude tomorrow, and I'll also have them in the text below this video. So if you look below the video on my blog at sidewaysmarkets.com, just scroll down a bit. There'll be a link that says click here to read more. Follow that link, right, and you'll see all of the support and resistance levels that we'll use for tomorrow's session. They will be okay for the rest of the week. They will be used the rest of the week, but the most powerful will be tomorrow morning. All right, guys, so early in, early out tomorrow for those crude traders around that news event. Watch those support and resistance levels, which we'll see here in just a moment. Other than that, that's about it. Not a lot of news tomorrow morning. And again, as I mentioned in last night's newsletter, we're going to start getting contract rollover for the E-minis and the currencies. The currencies will be next week, but the S&P, NASDAQ, Russell, Dow, you're going to start seeing those pop-ups on your charting software. So be aware of that. We're going to be going into the March 2018 contract as soon as volume rolls over there. And we also have that employment number on Friday morning, which shouldn't affect us too much tomorrow, but Thursday and Friday, though, we'll definitely start seeing that employment number start to creep into our price action towards the end of the day on Thursday. That, of course, getting ahead of myself, we'll come back and talk more about that in tomorrow night's newsletter. For right now, let's jump into some charts. We'll go crude oil, S&P, NASDAQ, gold, and we'll wrap up tonight on the euro. Crude oil first. Crude is bearish and trying to retest today's low after breaking below this key rising support trend line. My plan for tomorrow is to use that support level as resistance now for selling opportunities tomorrow morning. The big challenge tomorrow is that weekly inventory report, which means anything can happen before the report comes out and after the report is released. The most important thing tomorrow is to get to those trades early. Remember 10 o'clock cutoff or 10 o'clock suggested cutoff, right? Then let the news come out and trade the reaction a few minutes afterwards. Now, of course, it's always nice to know where we're coming from so we can know where we're going. Again, up in the upper left-hand corner, there are those support and resistance levels I'll be using tomorrow morning with all you guys and gals in the trade room. We talked about this last night. The topic of last night's newsletter was a grind break, right? And we talked about that grind break level being right there, right? So what a beautiful example of a grind break. We call it trap high. And now those bears are trying to basically go back down to retest 57.08, right? Retest that low. Beautiful example of exactly what we talked about in last night's newsletter. If you missed last night's newsletter, right, there's a playlist on my YouTube channel, or you can just scroll down on my blog at Sideways Markets, and it'll be right in order there as well. Now, you'll notice this rising support trend line. This is going to come into a couple more. You're going to see a few of these later on in this video tonight. If I take that trend line and I paste it up top here, what does that create? It creates kind of a flag pattern, right? We talked about that last night on the newsletter as well, right? Strong move down, bull channel. It's not a bull market. It's a flag pattern, right? We talked about that again in last night's newsletter. Look how the market just poked its head. What a perfect storm for the sellers, right? They get their grind break, trap high above the 57.81 swing, and they get that overshoot of that flag, right? Or that channel high, which again, if you watched last night's newsletter, those were two different topics we talked about. One, I believe, was on gold, and the other, right, was on crude oil. But they were melded together pretty well here on this crude oil chart. So beautiful example there. Now, the hard part is usually getting below these rising support trend lines. Well, we had no problem getting below the rising support. So now I want to try to use that support trend line as a level of resistance. Now, the way this might work for tomorrow, if I can kind of do this here, let's make that red. Let's make this yellow. Yep. And let's do this, right? So think about it this way. Up, break off that trend line. Buyers try to buy the pullback. Buyers try to buy that pullback. It's a bear market, and they fail, right? Failure into pullback, and then down from there, right? Looking for selling opportunities here on that buyer failure. Remember, it's a bear market, so anytime we go back above the moving average, I'm always looking for a buyer failure. We saw one right towards the end of the session today. Then if we can get those buyers to fail, then we can jump in on that pullback to the moving average thereafter. The one thing I really don't want to do here tomorrow is try to mess around with selling in this area right here. In fact, I really should have labeled this as kind of a buy zone, not really a buy zone, but, kind of a no trade zone for those, right, for those sellers. This is a great spot for those aggressive risk-taking buyers to start picking bottoms here, right, tomorrow morning. So you really want to be careful as the market goes lower. So just like we did last night, let's do the up, down, and sideways, right? If it goes up, I want to see that move off of that trend line. I would love, love, love to get a chance to sell off of this 57.78 swing. That thing's just begging here to be sold. So that would be even better, right? Depending on what time looks like at that point. I'd like to use that level of resistance, whether it be that swing at 78 or, again, that prior support level being used as resistance. Now, if we go sideways here, right? If we go sideways here tomorrow, it's a bear bias with a sideways range. So my plan's pretty simple. Anytime we have a trading range, we look for the 2-try rule and focus on those failures. We go up, 1 try, 2 try. Think about where those stops will be for the buyers, and then fade that move right back down in, right? Anytime we go sideways, double tops, double bottoms, flat moving average, we then look for that trap high, follow that move going lower, right, and sell back down. The hard part's going to be if the price continues to go lower here, right? If we don't get the pullback, and if we don't get it to go sideways, as we go lower, this is when I always kind of remind myself those 3 important questions, right? What are those 3 important questions that we always want to ask ourselves before we take a trade? What are they? Who has control, right? In this case, the bears. Where is the objective, right? Or where is the target? Or where is the goal, right? In this case, the goal is to get back down to 57.08. Okay, that's the most reliable short-term target for those bears. Then the final question, this is the most important question, okay, is where are we now, right? In other words, where are we in relationship to that goal or to that objective? Okay, so kind of follow the bouncing ball here. And if you don't know all of these answers, then you shouldn't be touching any buttons, right? So who has control? The bears do. Where is the objective? Back down to that 57.08. From there, then we can worry about that big low from last week, right? Last week's low, which talked about in last night's newsletter. Right now, here's the big question. If we go lower without pulling back, where are we? We're right at the target. We're right at the destination. I don't want to get short when sellers who sold up here, right? I don't want to get short where sellers who sold at the right location, sold at resistance, are now becoming buyers and getting out, right? I don't want to sell at support. I want to sell at resistance. I don't want to sell where the sellers that are already in are getting out because they become buyers. So these three questions are really, really important, right? Who has control? Where's the objective? Where are we now? So if we go lower, what happens? We are right there knocking on the door, right, to reach the goal, to reach the target. So rather than trying to sell down here, I need to focus on selling at resistance, selling high. If I sell down here, relatively speaking, I'm relatively low on this chart. So again, if we do go lower, right, I want to get up and come back down. Usually what happens is if we end up going lower here, it'll be a series of real small pullbacks like this. Find those prior swings, and your goal now is to simply look for those traps, right? Trap high, back down from there. Okay, so if it does just kind of keep grinding lower, the hard part is tomorrow's the weekly inventory report, so really anything can happen. You know, a lot of traders do crazy things on Wednesdays. You know, I talk to traders all the time. And it never ceases to amaze me how many people I talk to every day with very little experience who say the only day they trade crude oil is on Wednesdays. And I'm thinking, if I took one day off from trading crude oil, it'd be Wednesdays, right? My opinion was the exact opposite, right? For a lot of the rookie kind of gambler types of traders that flood this market, right, with market orders, you know, buying high, selling low, and so it tends to be more of a weird type of price action environment, right, leading up to and especially after that news report comes out. So you got a good plan if price goes up, if price goes down, or if price goes sideways. Remember we talked about this last week. We've got that kind of prior week low hanging out down here, right? 56.82. So if we do keep going lower here, right, your goal then is just to keep patient, keep focused on traps, and sell those traps tomorrow. Just because we go lower doesn't mean now we can sell low, right? I realize that it takes some patience and some discipline, and discipline is really what it is, right? But it'll be in your best interest to wait for that move, right, to pull back for you. Now, how do we turn bullish tomorrow? Yeah, we could definitely turn bullish here. Like I said, it's a weekly inventory report tomorrow morning. How do we turn bullish? Well, boy, they had a chance here, didn't they? Right? New higher high, big strong move up. All they had to do was hold that pullback, and this is a bull market. You can see that beautiful failure back down in. That's why we know this market is bearish, because the buyers had the opportunity here on a silver platter, even had that rising support trend line to prevent those sellers from selling into them. You can see the bears didn't want to sell into that trend line, so what did they do? They waited for the price to get away from the trend line. There comes that wick, right? And that wick shows, kind of illustrates how the market went up. Bears came in, sell, right? And then it finally, right, dumped over. So the bottom line is the bulls need, as we mentioned in last night's newsletter, strong move up, pull back to the moving average, and strong move through. This can easily happen tomorrow, right? Wednesday's news day on crude oil. This could easily happen tomorrow, but we're not there yet. So stay patient for a strong move higher. That'll get the party going in the right direction, but then those buyers, they have to hold that pullback around the moving average. Strong move up, pull back to the moving average, right? And of course, strong follow through. Those are three things we look for, right, for a reversal. Okay, so get in early, get out early. Be careful on crude oil tomorrow. Please do not gamble away your hard-earned capital on a Wednesday inventory report. There are so many better times every week, more reliable times. I realize that volatility is enticing for a rookie trader, but the knife cuts both ways, right? What makes you money quickly usually loses you more money even faster because your stop losses are market orders and your entries are limit orders. If you get any more questions on that, shoot me an email. My email address is jj@schooloftrade.com. Be happy to go over more details on what I just mentioned there. All right, how about some S&P? S&P is bearish after finishing today's session with another strong move lower. This tells me, just like yesterday, to wait for a nice large retracement for selling opportunities tomorrow morning. One of the big clues for tomorrow is this reversal line up there around 26.34 and change, and combine that with the previous swing high will create a great battle zone for us to use tomorrow morning. Boy, oh boy, what a great example once again from last night's newsletter. Right, we talked about that deep two-legged pullback inside that battle zone, right? Remember this from last night? Last night we came in, we finished the session last night with a big, strong move. What was the most important clue from last night? It hadn't pulled back to the moving average, right? It had been more than 4 or 5 hours since that move had pulled back to the moving average. What does that tell you? It tells you that a lot of traders are still waiting. right? Waiting where? Waiting to get back up into prior levels of resistance, right? Which I call my battle zone, to sell that sucker back down in, right? Good example today. Day started off inside of a trading range, bear bias inside of a trading range. What do we always look for? Yep, up. One try, two try, and then back down into that range we go. So here we are, right? A little bit of deja vu. We've seen this already before this week, right? Strong move down, barely pulling back to the moving average. This one isn't as bad as it was yesterday, but still a pretty, right, a pretty wide open move lower, right? So if you were a seller and you were waiting to sell this pullback, if you were a seller and you were waiting for some sort of trap high, if you were a seller and you were waiting for a chance to sell at resistance, you didn't have that chance this afternoon. So you're going to pack it up and say, oh, well, guess I missed. No, you're going to move your orders down. You're going to keep waiting for that price to pop back up. Now, like I mentioned in last night's newsletter, anytime we finish the day with such strength going lower, a lot of time people will take their profit right at the end of the day, or they'll wait and see what the opening bell looks like in Asia, right, just a few hours later, and then they'll decide, well, this green candle definitely tells us what's happening right now, right? So bears are clearly taking profit. So up, down, and sideways. Up, down, and sideways. Up first. Let's look left. Oh, sorry about that. Not that far left. Look left. There's my prior reversal line. They did come back and give that reversal line a little kiss there, but usually the best test of reversal lines, they'll usually come after a nice deep move lower, right? So back up to that reversal line and back down. I also have this trend line coming down here overhead. I have to say it's not really the best trend line in the world because it's ignoring a couple of these bounces. There really isn't an easy way to draw a trend line off this high. None of these really fit very well, and it kind of goes hand in hand with the overall personality we've seen on most of these markets ever since about mid-July, right, early July. So the bottom line is I wouldn't say this trend line is rock solid, but it is a trend line I'm keeping my eye on here for tomorrow. And the reason why I say it's not rock solid is because it skips those highs right there, right? See, I need to be able to explain why the market bounced right there. Okay, the better trend line would be something like that, but it doesn't make any sense though. It really doesn't. It doesn't fit very well. It just doesn't. Again, it doesn't make any sense. So what I'm going to do is I'm going to put this trend line on here, and we'll see if we get a chance to use that tomorrow, right, as well. So would love to get the market to come off of these lows, up, one try, two try, get that moving average over, right? Failure, breakout, pullback, back down, right? So failure pattern, pullback pattern, and the objective is always to get back down to retest those lows, right? Always pull back up, back down to retest the low. If they continue through that low, then I'll start looking for a measured move pattern, right? A measured move target, A, B, C, D target, right? And don't forget, we still have last Friday's low all the way down there at 2605. Remember, we talked about this last night. The S&P has a hell of a run in front of it if these bears can keep this going, right? We talked about that last night, how there's a lot of open space down here to go back to that big dip we saw on Friday of last week, right, during that end of the month. So with that said, we know we want to get the price to go up, right? We may get a deeper pullback than normal, right, such as maybe a two-legged correction, two-legged retracement, right, whatever you want to call that. Pullback or retracement. It's technically a retracement, but we all kind of call them pullbacks or corrections these days. So again, use that trend line up into that battle zone, right, and then sell that sucker back down. We could really call the battle zone this entire range right there. I just don't want to sell low. I want to sell high. What if we go sideways? Like I mentioned last night, right? Big move down. If we don't see too much profit taking and if nobody keeps selling here, we could easily be going sideways like we did to start today's session. If we're going sideways, what's the plan? Yeah, two-try rule, focus on failures, right? Up, 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 and then sell back down from there. Pretty easy, right? Pretty easy from there. Now, what if we go lower, right? What if we keep going lower? What if we just keep grinding lower here? You got it. Ask yourself those 3 questions. Who has control? Where are we? And where is the objective, right? We have to assume that we're just a little bit too low to want to keep selling right now. Most sellers are going to keep taking their orders down off swings, off swings, off swings, off swings, and all we need to do is get up, right, and then sell that sucker back down again. Remember, the bigger the correction off the low, the more profit potential you have. So you're incentivized to stay patient and really swing at those high probability setups. And high probability trades happen when there's a lot of profit potential, right, on that trade. How do we turn bullish? 3 things, right? Strength, pullback, strength. Strength, moving average comes over, pullback, okay, and then strength. Remember, if they fail, though, that's a sell, right? If they fail, that's a sell back down, right? So back in that battle zone. Now, the hard part, obviously, is this is what we'll have to wait and see kind of where this happens. We get that trend line overhead, so we may not get anything decent to actually trade from the bull side until we can get above that trend line and use it from there, right? Does that make sense? Depends on where this thing turns bullish. If it turns bullish right into that trend line, then we got to stay patient, get above that trend line, and then go from there. Short-term targets, obviously, for the bulls are back up to retest today's high. And then don't forget about that trading range the week began from, right? If for some reason this thing takes a complete U-turn, right, that's where they're looking for later on this week. All right, guys, looking good there on the S&P. How about some NASDAQ? NASDAQ's a pretty interesting story here tonight. NASDAQ is bearish and rotating back down to the low of a large trading range. And this short-term channel will be a great tool for timing the entries and exits tomorrow. This move down off the midday highs was quite strong, and with a naked reversal line up around that 91.25 area, I'm waiting patiently to sell a pullback up in that battle zone tomorrow. Now, I talked about this last night, early this evening as well. Don't forget, rollover on these markets, right? All the E-minis. So keep an eye on volume. I'm not talking about contract expiration. I'm talking about contract rollover. If you go to the blog here at sidewaysmarkets.com, there's a search tool on the right-hand side. Search for contract rollover, and you'll learn more about my strategy. Now, I think the most important thing right now is let's zoom out a little bit here, and let's kind of play this game of, where we've come from, right? So if you recall from last night's newsletter, we talked about this bear channel, right? And that bear channel, we had a nice 2-legged pullback, buyers failed to hold, and we collapsed back down to that low. As I mentioned from last night's newsletter, right, we were looking for, as we came off of that low, I was expecting them, right, to continue that move down to a bear channel, right? Well, that bear channel didn't exactly come into fruition. So all we have is that short-term bear channel. The long-term bear channel, right, for whatever reason, didn't materialize. Then we see this big, strong move higher, right? All the buyers had to do was just simply hold the pullback here. All they had to do was hold the pullback and go, right? And they would have had no problem intimidating all of the sellers, and the buyers would have been walking their way up to that trading range where the week started, right? But sure enough, look left and look where we are, right? A little collection of resistance levels we marked up from last night's newsletter. And of course, the buyers are unable to hold the pullback, and we tumble lower. This happens quite a bit. We see a strong move down for whatever reason, right? It doesn't matter what time of day it is, what market it is. We then see the bounce off this low, right? That bounce off this low, who has control? The bears do. Where's their objective? Back down to retest that low, right? All we're doing is we're looking for selling opportunities above those prior swings. And where are we? We're nice and high, right? So bears have control. The objective is back down to retest the low. And where are we? We're nice and high, up at resistance, right? So everyone's thinking sell. Price now collapses back down. Okay, now, where are we now? Now we're starting to get closer to retesting that low. So here we are now in the NASDAQ. We're right in the middle of that move, right? We're on our way back to retesting that low. That's the objective. Most important thing right now is look at this as a trading range. Bears had a chance to sell off that high, and they're trying to go back down to retest that low. All they have to do now is just be careful selling too low right now. So let's play that game. What if price goes up? What if price goes down? What if price goes sideways? First of all, naked reversal line up there at 91.25. Prior swing, right, 13.5. We do have, again, talking kind of in sync with my last comment on the last chart, right? A little more reliable trend lines would be like that. This is a decent trend line, right? It's only got 2 tests of it though, so it could be better. Once you see a trend line that has 3 touches, then you know that trend line is something you really need to pay close attention to because everyone will see it as well. So this trend line is definitely important. I think you could probably get away with calling this, right, the battle zone. So as price goes higher, we get that falling trend line. Again, we got the naked reversal line, the swing before it. That creates my battle zone. So again, as I always mention, right, I want to go up, use that level of resistance to deter those buyers. Buyers don't want to buy high, right? They want to buy low. So as the price goes higher here up into resistance, your job is a whole lot easier to sell that market back down. Maybe we see a little more drama, right? Maybe we get a little 2-legged pullback here, right? And we can combine that in together tomorrow, right? Bottom line is I want to be a seller as long as the bears here have control. What if price goes sideways? Boy, you can definitely see it starting to show signs of a sideways market, right? Price rolling sideways here right now. Same thing. Look for that 1 try, 2 try, back up above that range, up inside that battle zone. And what if price keeps going lower? Right? We keep going lower here. We keep going lower. You focus on those prior swings. Get that market up, and then sell it back down from there. Remember, bears have control. We want to sell at resistance. We don't want to sell down here at support. Now, we get the prior month low just below that trading range, but remember, anytime we get back to the objective, I need to see some follow through. Show me some follow through, and then I'll look for that support level to become resistance, and we can sell it back down from there, right? I don't want to sell at support. I want to sell at resistance. So get through that support level and turn it around and use it as resistance on the opposite side. Let's see. How do we turn bullish? Same thing, right? Big, strong move up, hold the pullback, and explode higher. This is going to be a little bit tricky because we have, obviously, we just saw sellers of the market, so that's top of the range there. We got that falling resistance line there. So this is going to require some pretty good strength here in the overnight session to clear above that trend line. And then don't forget, right, we began the week in a trading range up there around that 63.70 area. That'll be an easy magnet tomorrow for the buyers. We'll find our own bull channel. We'll use that bull channel as support and look for buying opportunities from there. NASDAQ in the books. Let's grab some metals and let's wrap up on a currency here tonight. Over on gold right now, gold is bearish with a spike in channel pattern, which tells me to look for traps and buyer failures up around the battle zone tomorrow morning. The big clue for tomorrow is this rising support trend line. I talked about this on oil earlier in this video, right? So stay tuned for that. My goal will be to get high enough on the chart so I have enough room for a target, or get back below the trend line and use it as resistance on the way back down to retest the lows tomorrow. So as you can see here, pretty simple, right? We had this just kind of blowout here earlier this morning. Strong move down, that spike down to the prior month low, and we see clear continuation right from it. That's a spike in channel. Now, we always talk about this at least a few times a week on this newsletter. Anytime I see a spike in channel, I'm always thinking, find the base of that channel, find the first pullback, and that creates the battle zone, right? Now, in this particular example, we got that prior month low at 1270, so I'm kind of extending out this battle zone a little bit wider. But if you want my opinion, the real sweet spot is going to be that 73.2 down to 71.9, right? That'll really be where we want to sink our teeth into tomorrow morning. So we're looking for, again, who has control? The bears have control. Where's their objective? Back down to retest that low. Where are we right now? We are just above a rising support trend line. You'll notice I like to shave off those wicks. That way it's kind of a worst case scenario. See, I'd rather draw the trend line steeper like that than to draw it wider, right? That way I kind of err on the side of caution. Because if I take this trend line and I copy it and paste it just up top of that high, Now that becomes a flag pattern. We talked about a flag pattern earlier on oil, right? So as the market goes lower, now it's flagging higher. How do we trade a flag pattern? Again, if you go to my newsletter on my blog at sidewaysmarkets.com, search the right-hand side, use that search tool, the term flag pattern, F-L-A-G, flag pattern, right? And how do we trade a flag pattern? We want to get above it, right? We want to get above that channel, much like I described earlier on. That's going to be really the key, is getting far enough away from this rising support trend line so it's not going to impede me, right, going lower. Remember, if you don't have a lot of room for a target, you're not going to get everybody else excited about it, and you'll have lower probability on that trade. I don't know why, but this took me a long time to kind of get through my thick skull when I was learning how to trade. You know, I always tell my clients this. If you don't have a big open space for a big target, you're not going to be able to get everybody else involved with that trade, right? Nobody else want to take that trade. And because we literally survive by using the self-fulfilling prophecy, if nobody else wants to take that trade either, then my trade's not going to be very successful, right? It's very low probability, right? If I can get a good distance away from, right? If I try selling right now, not a very good probable trade. But if I can get away from that level and then sell it, see, now I have enough distance to make it enticing. I can take a small amount of risk, right? And I can get a larger amount of reward and then leave a runner, right, back down to that low. So you really got to get away from that rising support trend line. It's either that or, right, get below it and use that trend line now, right, as a level of resistance. So the key variable here tomorrow, at least from my point of view, is going to be that rising support. I want us up in that battle zone, either far enough away from that rising support so I have plenty of time or plenty of space. That'll get everybody else excited about it. Or get below it, use that trend line, right, and sell it back down from there. Right? So those would be two key components here for tomorrow. What if it rolls over? Right? What if it just rolls over? What if it just kind of dumps here overnight? What if it rolls over? Well, if it rolls over, again, you know where the objective is. You don't want to sell into the objective, do you? No, you don't. You want to sell at resistance, right? Not sell at support. So if it just collapses lower, you know, don't chase after it. Chasing after markets gets you a bad fill. It requires more risk, right, compared to the reward. Not a very good idea. Wait for the price to pull back. Don't chase after it. I realize you can get lucky once in a while chasing after trades, but it's difficult to get lucky every day as a professional trader. Over time, right, you'll slowly lose your account by doing that. Last but not least here, how do we turn bullish tomorrow? This could easily turn bullish, right, because you get that rising support trend line. So that rising support trend line combined with that prior month low, I mean, hey, we may see this market jump up, hold that prior month low, hold that trend line, right? This could easily be a bull market. And if it does turn bullish, where are they going tomorrow? Yeah, I don't need a volume profile chart. I don't need much. We're going back to that trading range, right? Trading ranges always act as magnets because that's where the most amount of volume is traded. That's where traders agreed, right, by supply and demand. They agreed on value in that area. So 77 to 78 area tomorrow becomes an easy target for us, right, if those buyers can take control here. As we go lower, the hard part about this right now is there's not a lot down here, right? We're below the prior month low. So if we do end up rolling over lower here, again, you just keep focused on selling high, right? And we'll kind of watch this thing develop as it goes because there's not a lot down here, right? There's not a lot down here right now on the 218 contract. All right, from the metals over here to the currency, over to the Euro futures, wrapping up tonight. And I always appreciate your time, so thanks for sticking around with me here tonight. The Euro is bearish with multiple channels to work with tomorrow. But the most important clue on this chart, at least in my opinion, might be the prior week low. The bears clearly have control, and the high of the bear channel is a great place to be a seller. But this bounce off the prior week low tells me that selling too close to this major support level won't be a very reliable place to do so. So my plan for tomorrow, I'm going to wait for a larger retracement, try to get up around that battle zone for a little more reliable selling opportunities right tomorrow morning. Most important thing right now, we got a big channel here. This big wide bear channel, you can kind of see how rotation seems to hold together here. Right? It's not the most prettiest thing in the world, right? But that coming in overhead will be my kind of key level of resistance there. Then, of course, you got the shorter channel. This short-term channel is much more reliable because you can see the rotation back and forth, right? Anytime you see a good rotation back and forth like this, you know that everybody knows where it is. And when everyone knows where it is, as long as you're selling high, not selling low, you've got a good opportunity to make some moolah. Now, with that said, most important clue I think right now is what happened at this prior week low. Now remember, anytime we see a market turn direction like we did right early last week, we went from bullish and we collapsed all the way back down to bearish, you know what they're hunting for. They're hunting for that last week's low. So here we are now. Think of that prior week low as the objective, right? So who has control? The bears do. Definitely not the bulls. Okay, where's their objective? Well, their objective, in my opinion, is the prior week low, but really their objective is down to retest that low. So we have a long-term objective, the prior week low. That's what we assume the seller's trying to get to from earlier on this month, right? And of course, the longer term down below that 18,100. Now, where are we? We're right here. So depending on your personal opinion, and this will be different for different traders, right? If you're a short-term trader, you might think, no, we're not that bad. If you're a longer-term trader, you're probably shaking your head right now saying, no, we're way too close to support. There isn't enough space to go lower. There isn't enough profit potential for me to put risk on this trade right now. So where could I get into an area of resistance in a bear market where I can take a small amount of risk for a much bigger amount of reward? I'm glad you asked. Up above prior levels of resistance, right? So now if I go up and we see that trap high into a failure, right, into a pullback, as you can see here, we've got 1, 2, 3 different ways we can participate in the rotation back down to that low. And all 3 of them have the ability for a small amount of risk and a nice big reward right on the way back down to retest that low again. And then depending on where that goes, right, possible measured move here. It may also be a larger measured move if it does, right, break above that prior swing. So I'm watching for a measured move, retest the low, right, and then measured move from there. So price goes up, looking for that failure up inside that battle zone. If price goes sideways here tomorrow, trading range up, 1 try, 2 try, back down in. And if price goes lower, what's your goal tomorrow? You got it. Keep focused on those traps, right? Get that trap up and then back down from there. All right, guys, great examples here tonight. And I hope you learn more about those 3 rules, right? Those 3 rules, those 3 questions that everyone should ask before you take any trades tomorrow morning. Boy, we've covered a lot in this newsletter. Time flies, that's for sure. Don't forget, though, if you want to learn more about our trading strategies here at School of Trade, if you want to learn more about everything that means to be a client, make sure you join the free trial. If you're on our YouTube channel right now, there's a link in the description of that YouTube video. Follow that link over here to the website, schooloftrade.com, and come see me as a guest in the trade room on that free pass. While you're here, grab your beginner, intermediate, or advanced classes. My clients have unlimited access. They can take as many classes as they want, right? And of course, it includes unlimited time with me every day in the trade room. Any questions? Hit me up on live support on the right-hand side of the website. And don't forget, you might be alone at your computer right now, but you're never alone in your trading journey. I'm always here to help. Hit me up on live support. Use any of the contact information on the homepage of the website. I look forward to speaking with you and helping you do this the right way, just like I've done with thousands of clients, right, in our long-term career here at School of Trade. Got to run for now, though, guys. Got to run for now. Get some rest. We'll come back and do it again tomorrow. 8 o'clock Eastern time tomorrow morning. We open up our trade room. 8 p.m. Eastern time tomorrow night. If I don't see you there. Adios, amigos. Bye-bye.